Hi, it is Tuesday, November 20th, and we're taking a look at the S&P 500 after hours ahead of Wednesday, our last day of trading before we head into the holiday. On Thursday, the market is closed, and on Friday, we only trade through 1 o'clock Eastern Time. And if you have any of the S&P options not expiring on Friday, but expiring from Monday on forward of November week 5, you can still trade those up until 1:15 Eastern time in that little 15-minute window that you still have after the close, but not the ones that are expiring on Friday. Those will be cut off at the bell. Anyway, taking a look here, starting off with a look at the roadmap, and today we had this huge gap down, gapping down below where 2018 closed or where 2017 closed and 2018 opened. That was kind of strange. I realized that just before I started making this video. I had a color bar around these levels just to sort of highlight attention to them, and then the gap ended up being perfectly on that bar, and I was kind of using the low that we made here on the 15th down at 2670 on up to where we had closed yesterday as that area, and we went ahead and we gapped down all the way down uh, well below this low, and we rallied back to just shy of this low that we put in last week. That had been a sort of half-assed back test of the October flush out low on 1029. I didn't really understand or see anything of relevance or why that particular low held. When you look to the left, you really don't see anything too specific other than maybe the open on the 26th. But I tend to think that closes, highs, and lows are what matter more than opens do when it comes to back testing support. So I didn't really see any point to why that low was particularly important. So it wasn't surprising to see it break and for us to press down a little lower. And then our high of day, though, could not get past that low. So that's kind of interesting. So that's the bearish take on it. But the positive take on it is that we put in a slightly higher closing low today. Our closing low still remains this one back here from the 29th when we flushed down to 2603, and then we had that just ridiculous snapback rally off of that. Our intraday low was 2603 and our close was 2641. I mean, that's crazy, right? Like a 38-point rally, and this all happened literally in 15 minutes. And anyway, so we were kind of fighting and battling around that level today at the close. So that's a kind of an important level. And when you look back left on the chart, I won't make you dizzy and roll back through this chart to show it to you, but in your own daily S&P 500 chart, you can go back to April and May and take a look at how important the 2642 level was. The last time I had this level marked on the chart, I had it marked as the halfway back of May 4th. And that was a huge, big rally day. That was the day that I think we had Warren Buffett on in the pre-market. And we had a huge rally that day. It was pretty much the launching point that took us out of the dumps of May, and started us on that road into the spring and summer rally. And anyway, that used to be marked as the halfway back point of that day, and it was a pretty good level of support for any dips from there on forward. And so here we are, still using that level. So if there's something still left in there emotionally from people that bought that dip back in May, that could be a reason why we keep gravitating back to it and closing on it. So you see we had a close here and then open on it the next day, 1029 and 1030, and then today we battled to close on it over it again, just by a hair. 41.89 was our close today, and 41.25 was our close back then, making that the closing low. So in any case, the low today pressed down to 2631.52 against 2603. That's really not a close enough back test. I mean, you can't say that that's not going to get tested lower at some point. I don't know if that's going to be tomorrow. I have a feeling maybe on Monday. Cyber Monday has a tendency to be a day that opens high and then just sort of sells off the rest of the day. And I think it's a phenomenon that we usually end up rallying on thin volume and algos, and nobody shorting on Wednesday and then following through on Friday. So we have this rally that they come into on Monday and they just sell it. They just buy the puts cheap and just sell it down all day. So I would say if we're going to go and back test this low a little closer, maybe it would be on Monday. maybe we would hold a higher low against this and then take off for a little bit of room to the upside. But, I want to take a look at the calendar one more time as well. In the video that I did over the weekend, I was pretty convinced that we were coming into this week um, after having, a really majorly down week last week, and then we recovered and rallied on Thursday and Friday, and then I thought we were coming this week and we would have pretty much a good steady climb all week and then begin to sell off again November week 5, starting with Cyber Monday, leading into the GDP, the Fed minutes, and the G20. That's all going on next week. So if we do get a nice little rally going tomorrow and it follows through on that half day on Friday, be prepared for the possibility that we have that typical sort of Cyber Monday sell-off. And then know that there is this GDP read coming in on Wednesday before the open. It's going to be one of those mornings where we could have like a little sell-off right in front of the bell if the market gets spooked or doesn't like that GDP reading. And then, of course, we have the Fed minutes on Thursday. Usually these are on a Wednesday, but the Fed meeting was knocked off by a day this month. So we have those Fed minutes. We almost always sell off on the days of, or have an inside day at the very least on days that of the Fed or the Fed minutes. And then we have the anticipation of the G20 summit, which starts on Friday, and that whole meeting of the, between Trump and Xi of China. So whatever. Anyway, so let's go back to the intraday chart real quick and talk about that head and shoulders pattern that kind of played out today. So I was talking about this in some charts and stuff last night, talking about that if we did not rally today, maybe we were going to come in and fulfill this pattern, and we pretty much did, although we pierced through the target line on both the lows. That's okay. I just like to have it there so that we understand where the low might end up, and it did a pretty good job of sort of giving you a target point where the low would sort of stick. And maybe that has something to do with why we did not flush all the way down to 2603. So anyway, if we are going to rally back up tomorrow, let me put my 5-minute chart back up here. Yes, that's what my 5-minute chart looks like when you first roll in on it. A lot of notes on there, because that's what it's all about, is just taking notes and waiting for levels to come back. So here was our little bit lower low at the end of the day, rallied back up to the halfway back on the day, failed there, and came back and struggled around this closing low, but we did manage in the final 5 minutes to close back above it. So tomorrow, once again, we're going to be looking to see if we open or close above or below, if we're going to have a flat open, an up open, a down open, whatever. And first things, we've got to get past this halfway back. We got to get past this 6113 level, which is the halfway back from our low back to this huge gap that we have to fill overhead. And if we can get above 2661 and hold, I think we have a pretty good shot at just taking down Tuesday's high and that 2670 low from last week, and moving on up and filling this gap. Some people consider the gap to be filled when we hit the low of the previous day, the day of that gap that we're trying to fill overhead. I don't consider a gap filled until we get all the way to the close. But you might start to see some sell pressure as we get here, as some people will feel that they've been made whole again if we get to this 81 level and start to see a little bit of softness. But I would contend that that's probably just going to be a temporary thing, and we come back on the day and finish filling the gap. So that's all if that happens tomorrow. There is also the idea that we could just be at an inside day, and that everybody is expecting us to flush down lower and sell off big right before a holiday when nobody's at their desk trading. That doesn't make any sense. We tend to more so end up grinding up or rallying up, because then they love that. They'll come back to the desk on Monday after the holiday's over and buy the puts for much cheaper. So I think we have a better chance of rallying than we do of selling off tomorrow. But then again, there is always the idea that nobody is buying or selling anything, and we just sit in an inside day somewhere between 2670 and 2632. or even in a smaller range of above the close of 26.41, but not being able to get out above 26.70. So that's it. I hope that helped you out. I posted some charts tonight showing you what's going on with Apple, Amazon, and Netflix, and they all had pretty good days today. I mean, not really so much for Apple, but Netflix and Amazon had really good days today, and they'll be good proxies, I think, tomorrow. If you get up in the and you see in the pre-market that those are both up in the pre-market, and if Apple is at least flat and not selling off again, that could be a great precursor to tell us that maybe we are going to have a more upside day. Maybe we are going to come in and get out from underneath this 26.70 level and rally tomorrow. Okay, that's it. Have a good rest of your evening. See you in the morning. Good luck and good trading.